Are you searching for the next billion-dollar junior? Well, that's a statistical nightmare. Thousands of explorers, most of them are failing. Even the good geologists often still get it wrong. But here's the shift. You don't have to pick the next billion-dollar company to make serious money. You just need to find a junior that's doing most of the things right and is sitting on something in the ground that is actually real. And every now and then, the market will give you the opportunity where you can see exactly that before anybody else. So, 1922, in the eastern goldfields of Western Australia, miners walked away from a deposit that was averaging 15 grams per tonne. It's not because their gold ran out, it's because they couldn't make any money from it. The gold price had already collapsed, and the technology at the time, they couldn't chase the gold below the water table, so they just left it. Fast forward 100 years later, a $27 million market cap company goes back in. They drill one of the first holes in modern history in the system. And what does it come back at? 1 metre at 80 grams per tonne gold. And this was found only 48 metres of depth. The kicker? The hole actually ended in mineralization. They didn't even find the bottom. So the obvious question to me here is what's actually sitting in the ground? And why is the market valuing this at 27 million? Welcome back, I'm Amo. I'm an Australian geologist, and for the past decade I've worked in Australian mining. Everything that I talk about in this video is my own geological interpretation, and so you should not use this as financial advice. This channel is all about finding mine stocks before the geology gets priced in. Today we have Arika Resources, ASX ticker ARI, current market cap $27 million. Arika is sitting on 2 gold projects in one of the richest gold provinces in the world. And they have a maiden resource that is due for release any day now. Here is the one-line thesis. You are looking at a contact-controlled gold system sitting between some of the largest gold deposits in Australia. That has barely been tested. So let's start this where it always starts, the location. This is the Laverton Tectonic Zone. And this is not just good ground. This is world-class crustal architecture. Within 75 kilometres of Arika's Yundamindra project, we have Sunrise Dam at 10 million ounces, Wallaby at nearly 12 million ounces, Granny Smith another 2 million ounces. And then basically every major gold mine in WA just scattered all around them. That's not a coincidence. That's Earth's plumbing system doing exactly what it's supposed to be doing. Deep faults, structural corridors, and magmatic fluid pathways, all aligned to move gold-bearing fluids into traps. So when Arika hits gold in this location, that's not the story. The story is how much is there and how continuous is the system. And this is where it gets interesting. The most important detail that the market is missing. At Yundamindra, you've got 2 primary rock types. You have pink Monzo granite and a green basalt. And between them, you've got a contact zone. Now, check this out. Every prospect on the tenure, Pennyweight Point, Landed at Last, Bonaparte, Golden Treasure, and Queen May, they all sit on the same thing. The granite greenstone contact. Every single one of them. That's not multiple deposits, that's a structural corridor. And it's only been tested at a few points. How big's that corridor? 8 kilometres strike. Tested at maybe 5 spots. Every time we've hit gold. So the market is treating this like one deposit. But geologically, this looks like one system. Barely been drilled. Now, let's zoom in on Pennyweight Point. You've got 2 high-grade ore chutes. They plunge south to southwest. And in orogenic systems, we know that gold follows the plunge. And it's telling you exactly where to drill next. But then at depth, something's changing. You start to see multiple parallel lodes, mineralization in the hanging wall and in the footwall. The system isn't narrowing, it's actually getting bigger. And one more signal shows up. You get copper 1700 parts per million. In this system, that's a hint you're getting closer to the source, the engine room of the deposit. So instead of drilling to the end of the deposit, we may actually be drilling into the heart of it. Now, let's look at the drilling numbers because that's where things start to stack up. Pennyweight Point, we have 8 metres at 56 grams per tonne, 4 metres at 41 grams per tonne, 14 metres at 15 grams per tonne. These are bonanza grade intercepts. But it's not just all high grade, we actually get 0.58 grams per tonne at the surface. Wide, shallow oxide, that's cheap to mine. This is the combination you want to see in juniors. Near surface bulk tonnes, which equals early cash flow, and high grade at depth, which is your longer term value. Let's step 500 metres to the south. We have landed at last. This connects into a 2.5 kilometre long corridor. This has barely been drilled between the endpoints. Where it has been drilled, 14 metres at 3.1 grams per tonne, with surface samples up to 48 grams per tonne. And multiple holes, they're ending in mineralization. So that gap between the prospects, that's not empty ground, that's just untested ground. Now let's look at Kookanee. This district has already produced, historically, 360,000 ounces at 15 grams per tonne, and then it was abandoned. Not mined out, just left. Arika goes back in with modern drilling, and they start hitting 1 metre at 80 grams per tonne, 5 metres at 17.9 grams per tonne, 3 metres at 43 grams per tonne, and 2 metres at nearly 60 grams per tonne. And here's the part that a lot of people are missing. Almost none of this has been drilled below 200 to 300 metres. So, across 3 structural trends, we have Kookanee, Elysius, and Niagara. 9 prospects, multiple bonanza hits. And the system is still open in almost every direction. This isn't a closed out project. This is an early stage system with historical proof. So what's the market actually pricing here? First, the resource isn't out yet, but the vendor who sold the project structured the deal to unlock shares at 250,000 ounces produced and 500,000 ounces produced. They didn't take any cash, they took equity, and this equity is tied to ounces in the ground. This tells you what the previous owners believed to be there. Second, Kookanee already has a small resource, but those multiple high grades, they aren't included in it yet. Third, you have an 8 kilometre long contact with only about 5 points of it being tested so far. Every time it's tested, we find gold. And you're getting all of this for the price of a small explorer. Now let's talk about the risks, because this is still an exploration story. And we know that the risks are real. 1, there is no maiden resource yet. 2, there is definitely no processing solution locked in yet. 3, they have limited cash. There's likely going to be more dilution. 4, I can't find any metallurgical test work published. And 5, most importantly, exploration doesn't always convert. Continuity can break and the grades can thin. This is not a guaranteed play. But stepping back geologically, this is one of the strongest setups I've found at this market cap. You've got an 8 kilometre long mineralised corridor, multiple high grade intercepts, 2 project areas in a major gold district surrounded by mills. And at least to me, a system that looks like it's only just getting started. So the entire thesis comes down to 2 questions. 1, will that maiden resource land strong? 2, does the depth drilling confirm the scale implied? If both are no, well, that's another conversation entirely. If you've enjoyed this, please subscribe. I'll bring you some new videos really soon.